The corporate press is telling you to watch the interest rates. The financial talking heads are focused on quarterly earnings. They are all watching the wrong clock. They are tracking the heartbeat of the paper economy, which is already flatlining and being kept alive only by political illusion. We are here to talk about the real timer ticking down to the next systemic event, the 2026 crash. This isn't a speculative forecast, it's a cold, hard deduction based on the most reliable data signal in the world, the coordinated defensive movement of the global elite. What are they watching instead of the NASDAQ? They are tracking geophysical and hydrological data. They are watching the rate of depletion of the Ogallala Aquifer. They are monitoring the real supply chain, the global topsoil density. This focus shift away from finance and towards physical viability is the signal that should terrify every investor. We have tracked a collective, irreversible exodus of capital from highly liquid, easily tracked financial assets, specifically tech stocks, investment-grade corporate bonds, and over-leveraged real estate, into three distinct, opaque, and historically protected assets: water rights, high-yield farmland, and decentralized physical gold. The key phrase here is easily tracked financial assets. The elite are anticipating a future where centralized digital currencies or a massive regulatory crackdown could instantly confiscate or freeze digital wealth. They are moving into assets that cannot be digitally tracked or frozen, making this a hedge against political risk, not just market risk. Why 2026? The year 2026 is emerging as the critical nexus point where three non-negotiable cycles of scarcity, the debt supercycle, the food-energy nexus, and the great climate shift, are mathematically guaranteed to converge. The current financial stability is a statistical illusion maintained only by unprecedented monetary injections and regulatory forbearance. The smart money knows this illusion cannot hold when the physical world starts failing the financial world. They are positioning themselves for the moment when paper wealth finally bows to physical reality. Let's dissect the most damning evidence. We call it the $50 billion signal. Since 2021, the world's top private trusts and foundations, often operating under layers of shell corporations and blind trusts, have systematically liquidated an estimated $50 billion in non-essential financial holdings. They aren't selling for cash, they are trading digital claims for physical ground. This money isn't just sitting in a high-yield account, it is actively being deployed to acquire control points of essential global resources. The focus is not random, it is surgical. When acquiring farmland, they are specifically targeting rain-fed resilient land that does not depend on depleted aquifers or complex, energy-intensive irrigation systems. They are buying the last reliable food factories on Earth, not high-risk agricultural ventures. We observe an aggressive, quiet consolidation of two key resource sectors: fertilizer production and water infrastructure technology. Control over fertilizer, which is energy-intensive and responsible for up to half of global food production, gives them a chokehold on calories. Control over water purification and transport gives them a monopoly on life. Consider the historical parallel. Before the 2008 crash, the biggest signal was the massive, inexplicable purchase of gold and land by insiders who understood the systemic leverage failure. Today, the scale of the strategic land grab is exponentially larger, but the motive is identical: insurance against total system failure. They know that when the debt supercycle ends, it won't be a recession, it will be a reset of social order. Their acquisition of land isn't about profit, it's about geopolitical security, owning the physical location where wealth is preserved, not just created. Geopolitical security means a place where they can maintain autonomy, access to clean water, and self-sufficiency when centralized governments and supply chains fail. This systematic abandonment of the financial market by those with the deepest foresight confirms two truths. First, they no longer trust the institutions they helped build. Second, they are preparing for a crisis of physical scarcity, not just financial liquidity. The 2026 date is not arbitrary. It's when the food-energy nexus, the point at which the energy required to produce food becomes economically impossible for the average consumer, is projected to lock up due to compounding climate stress and rising energy costs. This will be the true trigger. They are not waiting for the system to correct itself. They are treating the current financial market like a sinking ship and moving to the lifeboat, the tangible assets that provide security, sustenance, and control when centralized governance fail. The predictive power of this elite exodus is the only signal that matters. It's time to stop watching the stock market and start watching the water table. The 2026 crash will be different because it won't be caused by a single financial instrument. It will be the synchronized collapse of three independent, non-negotiable cycles simultaneously destroying the foundation of global stability. This convergence makes the event uniquely destructive and highly predictable. Cycle 1. The terminal debt supercycle, the financial detonator. For decades, the world has run on ever-increasing, artificially cheap debt. Global debt, sovereign and corporate, is at historical highs relative to GDP. We are now entering the terminal phase of the debt supercycle. The current level of global liability is no longer a financial metric, it is a geophysical constraint. Every dollar of debt represents a claim on future productivity, which is fundamentally tied to finite resources: oil, water, and arable land. Central banks are now trapped. They cannot cut rates without igniting uncontrollable, hyperinflationary devaluation of the debt, and they cannot raise rates without triggering massive sovereign defaults and crashing the overleveraged corporate sector. The current policy is one of managed collapse. The moment a major sovereign nation or several major corporations fail in close succession, a certainty by 2026 given current trajectories, the illusion of solvency will shatter. The resulting liquidity shock will wipe out trillions in paper wealth. Crucially, this financial failure will translate directly into physical shortages. When banks freeze, credit vanishes, and the just-in-time shipping required for energy and fertilizer trade stops. The crash will be initiated by finance, but its impact will be purely physical: empty shelves and cold houses. Cycle 2. The food-energy nexus lockup, the social detonator. Food is just stored energy. Modern agriculture is a high-tech energy operation. Natural gas for fertilizer, diesel for machinery, electricity for irrigation and processing. The cost of food is therefore directly tethered to the cost of energy. The food-energy nexus lockup describes the point where persistent energy inflation, driven by geopolitical instability and the mandated transition to unstable green energy, makes the production of staple crops economically non-viable for marginal farmers. The energy cost to produce a bushel of corn or wheat is rising exponentially, while the consumer's income is stagnant. This creates an economic impossibility that central bankers cannot fix. By 2026, the compounding costs of fertilizer, fuel, and transport will push food prices past the threshold of social tolerance in major urban centers. This isn't just about inflation, it's about the physical unavailability of calories at affordable prices. The elites are buying farmland with existing water rights because they anticipate the vast majority of non-strategic, energy-dependent farmland becoming worthless. They are securing production, not just ownership, to bypass the broken nexus. Cycle 3. The Great Climate Shift, the infrastructure failure. The third non-negotiable accelerator is the Great Climate Shift. This is a current reality expressed through chaotic weather patterns. By 2026, the compounding annual impact of extreme heat waves, flash floods, and multi-year droughts will have permanently degraded agricultural output in key global breadbaskets, the U.S. Midwest, parts of Brazil, and Eastern Europe. Climate variability introduces non-insurable, non-hedgeable risk into the food supply. No financial model can predict or mitigate 3 failed harvests in 3 different major regions simultaneously year after year. This systemic failure of predictable harvests will break the global food trade and directly translate into geopolitical breakdown as nations hoard their domestic supplies. The failure is also hydrological. As aquifers deplete and rainfall becomes erratic, regions that were formerly food exporters become importers, placing unprecedented stress on the global shipping network. The physical failure of the climate cycle guarantees the failure of the financial cycle because the underlying collateral, the Earth's productive capacity, is disappearing. The convergence point is 2026. The debt supercycle provides the financial detonator. The food-energy nexus provides the social detonator, starvation or unrest. The great climate shift provides the physical infrastructure failure, water and soil. The elite are not preparing for a mild market correction. They are preparing for the complete, simultaneous shutdown of the global machine. Their actions are a blueprint for your own defensive strategy.
The crash will not be democratic. It will create a brutal two-tiered world, the resilient producers and the dependent consumers. Your action plan must be focused on moving yourself and your assets from the dependent category to the resilient one. Action 1. The capital transfer, buying scarcity. You cannot beat the elite, but you can copy their moves. Execute a surgical capital transfer now. Immediately reduce exposure to highly leveraged sectors, commercial real estate, long-term corporate debt, and highly speculative tech stocks. Instead of just holding cash, which loses value to calorie inflation, convert a significant portion into tangible, decentralized assets. This means focusing on physical gold, silver, the ultimate hedge against fiat failure, or most critically, small strategic land parcels with independent water access, wells, high rainfall, not contested rivers. Your goal is to own what they are buying, scarcity. Prioritize hydrological security rating, HSR, over proximity to failing urban centers. Every square meter of land you own with reliable water is a hedge against the inevitable resource nationalism. Action 2. The Infrastructure Redundancy Project. In a cascade failure, the centralized systems fail first. Your safety is in redundancy and locality. Focus aggressively on decoupling from the 5 major single points of failure: energy, solar, battery backup, stored fuel, and the knowledge to repair them; water, filtration, large-scale storage, cisterns, well access, and rain catchment systems. Aim for a 6 to 12-month buffer. Security, local community ties, not just private security. Information, hard copy manuals, off-grid communication tools, and printed survival guides. The elite buy fortified compounds. You buy local self-sufficiency. The ability to survive for 3 months without electricity, tap water, or a grocery store defines your security rating. This is your personal firewall against systemic panic. Action 3. The Knowledge and Skill Hedge. The most valuable non-financial asset is competence. When the system fails, your university degree in abstract finance will be less valuable than a neighbor who can fix a pump or preserve food. Hedge your time, not just your money. Master a physical, essential skill, mechanics, plumbing, sustainable agriculture, permaculture, or food preservation. This involves establishing your knowledge bank. The elite buy gene banks. You buy heirloom seeds and the knowledge to use them without industrial fertilizer dependence. Skills are non-inflationary and non-devaluing. They are the true currency of a resource-scarce world. You are trading intellectual debt for physical capability. Action 4. The Community Perimeter. The crash will be preceded by mass social unrest, driven by scarcity. The elite rely on private security and distance. You must rely on social cohesion. Your defensive position is not a fence, it is your local network. Prioritize building strong, reciprocal relationships with neighbors who possess complementary skills. A coordinated, resilient community is a defense mechanism the centralized state cannot easily penetrate or control. This network guarantees the flow of specialized skills and security when money fails. Isolation is the biggest threat in a system collapse. The 2026 crash is a certainty built on mathematical cycles. The elite are not signaling a market correction, they are signaling a civilizational shift back to the fundamentals of survival. Their actions are not a threat, they are a guide. The time you have to act is dwindling. Shift your perspective from quarterly profits to generational survival, and act now.